Ladies and gentlemen, up next we are diving into one of the most important skills in trading, risk management. Because in fast moving markets, survival is not about predicting every move perfectly. It's about knowing how to manage pressure, protect your capital, and stay disciplined when market moves against you. Let's all welcome Reno Deftelis, instructor from Tradepedia by XM.
Hello, everybody. How are you guys? Doing well? Okay, nice to see so many people here at FMIS 26, and hopefully we see some more coming in tomorrow as we go through all the different topics. If you guys don't know me, I've been trading for almost 18 years now. I traded through 2008, 2009 when we had the big crash, and afterwards through a couple of recessions, small recessions in comparison. And one thing that I've learned through my experience is that in the beginning, I lost a lot of money. And it was not because my method was rubbish. It wasn't because I didn't try and study. It was because of one thing, right? And that is what we're talking about here today is risk management. So the markets have been super volatile. Whether you've been trading stocks, whether you've been trading gold, silver, indices, oil. I mean, Trump is tweeting and then the market flies or it falls in a heap, right? And his buddies are making a ton of money in the process. Just kidding. So how many of you have survived these volatile markets? Very well. How many of you have not managed so well? Okay, and it is normal. I was going to say I can probably divide you guys up into about 70-30 here. 70% not managing it so well, and maybe 20-30% actually, doing well. And this market also, it fits a very certain trader as well. Maybe for the swing trader, it is not the best market in the world because the trends aren't that clear except for maybe one or two instruments. And maybe for the scalpers, so for the guy that made money, where are you? Excuse me? What type of trader are you? Are you a scalper or a swing trader? A day trader? Okay. So you take a couple of positions, you close it at the end of the day. Perfect. So certain markets fit certain traders better. But the difference between people that are making money and losing money isn't necessarily the method, okay? It all comes down to money management. And money management is, statistically, it is the part of your system, it is the part of your trading that accounts for 90% of the variance in a trader's success rate. That is how important it is, okay? So because, there's many profitable traders out there. We've all got different techniques. Whether you are using smart money concepts, whether you are using Dow theory, Elliott wave theory, you are using sniper entries, you are using whatever you want. The people that are making money, they are using different methods, right? So it's not necessarily the method. And I know the problem that when you guys get into trading, you work so hard on finding the perfect method. Yes? The thing that's going to make you money, this strategy, this indicator, this thing. But at the end of the day, it is not the most important thing. You need something that is actually okay, that you can follow. But the big difference is money management. To be honest, I can flip a coin for you. It's 50-50, right, in the long run. If I apply good money management, I can actually turn it into my favor, move it maybe from 50-50 to 47-53. In the long run, numerically, I will make money. Yes? Okay. So, what is money management? First of all, a stop-loss order placed for every single trade that you take, unless you are willing to blow the whole account, right? And that's also okay. I mean, if you got a small amount of money in your account that you are willing to risk for the day, so be it. But please, in order to know the worst case scenario and the best case scenario, we have to use a stop loss. Okay, it takes the fear out of the game. And I know why some of you don't like using stop losses, because you think the broker is watching you, right? I know some of you guys are taping up the camera because you think, they know exactly where my stop loss is. They're going to take it out and go the other way, creating liquidity or whatever you guys want to call it. Now, to be honest, I get stopped out quite often, and it's okay. You know why? Because when I entered the trade, I was fine with what I'm willing to lose on the trade. So whenever you enter a trade, you need a stop loss because you can't do position sizing, which is the next important thing, risking a certain amount in the trade. I mean, a lot of traders I have found trade a very specific lot size. Yeah? You love your favorite 0.25 lots or 0.2 lots or 1 lot. It doesn't make sense because your stop loss is not always in the same place. Or, if it is in the same place, it doesn't always make sense. Yeah? Me, I put my stop losses above the previous tops and bottoms because it's hard for the market to change the sequence of the tops and bottoms and the trend. But if you put it in the middle of nowhere, in the Sahara, because you traded too big, then you are more than likely to get stopped out. And if you trade too big, you get nervous, you get emotional, you add to losing trades, you move your stop losses because when you entered the trade, you didn't know how big you were supposed to trade in order to lose that certain amount. Yeah? Okay. And then the maximum amount to risk over a given period. So when you guys trade, your whole goal is to protect your whole account, not just the one trade. So you need to have limits on how much money can I risk per day, minus 2.5%. Okay, yes, I'm working with a big account, but 2.5% is my cutoff. If I lose 2.5%, I am done for the day. If I lose 5%, I'm done for the week. I can only trade the next week, which is good because then I get to step away. I get to clear my head. I'm not going to revenge trade. The problem is that money management is not so hard. I think everybody understands it. The big question is why when prices start moving fast, we become reactive, we become emotional. Yes? Because, I mean, when the market starts dropping like a ton of bricks, what's the first thing that you guys do? Because it's so easy with online trading, right? You can just click a button. You try to buy it because you are guessing like, okay, this is now going to be the bottom. Come on. This has got to be the bottom. And you're not going through the process of using stop losses. You're not doing position sizing. You're not going through your plan, yeah? Okay. So when it comes to trading, like I said, everybody knows the concept of risk management, but it's very hard to follow. And when the markets start moving fast, you are under pressure, your P&L becomes very personal. Because maybe you've already made 2 losses, you don't want to make a third, so you hang on for dear life, and the result is that you start moving your stop losses. You start adding to losing positions. So I was just telling a guy outside that he said when he gets into a couple of losing positions, he really starts getting angry and emotional. He wants to revenge trade. He wants to make the money back as fast as possible. And I know we are human, okay? We do have emotions. We do take things very personally. But when it comes to the market, it is not another person that you can argue with. The market will destroy you if you fight it, yes? If you keep on hammering and forcing the market, it doesn't care. So your goal as a trader, you are the CEO, you are the accountant, you are everything. So your money needs to be the most important thing for you as a trader, right? We always say one bad trade doesn't matter. Just because I had one or two bad trades, it doesn't make me a bad trader. But if I lose very small amounts, the market will give me another chance to make that money back. Yeah? The market will be there tomorrow, it will be there next week. You don't need to force things, especially when the market becomes as volatile as it has been. Because let's be honest, we don't know where the market's going. Okay, I don't know. Trump can come out and say something, some guy bombs something, some guy blows up a pipeline. I cannot predict what they are going to do, but I can protect myself in all cases. So that is your number one goal as a trader, is to protect your money. I know you guys see all these social media pages where people are making $50,000 in a trade and $10,000. It is unrealistic, okay? To be honest, professional traders, we don't post our trades online. We keep it to ourselves. We're too busy reading the charts the whole day and being with our family and actually enjoying life than posting about it. So the reason why we struggle is that when the markets are calm and it's not moving fast, we stick to the plan. It's very easy because the markets are moving fast. I can adjust things. I can assess things. The other great thing about slow-moving markets is that you can also use stop orders, right? It gives you time to use stop orders, buy stops, sell stops. That way you can already put your stop losses. You can calculate the position size. This is what I love to do. Even in the market that we have now, I use a lot of stop orders because it's giving me the time to pick the clearer trades. I've already got my entry. I put the stop order in. I know what I'm risking. I got my targets. It's done. I'm not chasing the market. I'm not forcing it. Then, I mean, if things start going against you, hope comes through the window. Right? I don't know how many of you joined my previous session, but I was saying when the market goes for you, we become very optimistic, pessimistic, yeah? Because it's on halfway to your target, and the market just has a little dip, and you close that position. You're like, I am right. See, I made the $50 or the $100. But when the market goes against you, hope is also a four-letter word, yeah? You start praying, you're hoping that this thing is going to turn around, and you take bigger losses than what you make winning trades. And that, unfortunately, is not a good formula for making money. You cannot have big losses and small wins. You will never, ever make money that way. You need big winners and small losses. That way you can have plenty of small losing trades and you are fine. Yes, I only need one big trade, covers 3 or 4 losses, and then if I catch a roll, all of a sudden I look back on the week and what a great week I had. But I wasn't that accurate. It was all due to good money management. Yeah? So, like I said, one of the reasons, actually there's three reasons we don't stick to our money management. Okay, we got the crazy mind, which we all have. Even after 17, 18 years of trading, I still have the craziness that comes in now and again. And hence, I need to protect my money. That little voice that says, come on, man, this thing has gone up too much. You need to sell it. And sometimes I will sell it, just with no risk, just to feed the monster. The need to always be right. We as humans, we get brought up in our environment where you get rewarded when you do something right, and you get punished when you do something wrong. Now, Unfortunately, this doesn't work so well in the market, okay? Because the market does not reward you for just being right. Uh, so hence, once again, accuracy is not the most important thing. Losing is part of trading. And the quicker you accept that, the better of a trader you will be. So you will cut the losses quickly, not hang on for dear life, and you will go on with your business and find the next trade. So that is key to making money. And then the other thing, fear of loss and FOMO. So the fear of loss, I mean, after you've made 2 or 3 losing trades, you become hesitant, okay? You don't stick to the plan, and then you don't take the signals that your system is giving you because you are so afraid of making another losing trade. It's also why you hang on to those losing trades for dear life. It is because I don't want to take another knock. The P&L becomes personal. And then the FOMO is, this is also making you not sticking to the plan because you cannot wait for the market to give you a signal, so you take the trade early, hoping that you timed it right, and then the market goes against you. So all these things are keeping us from actually sticking to the biggest thing in trading, which is your money management. So the market doesn't expose your strategy. Like I said, most people have a decent strategy. It exposes your mental weakness. Some of you, and this is actually why a lot of guys, so I know a couple of traders that used to go, they were special forces, they were in the military. They made excellent, excellent traders, even very good sports people. They made excellent, good traders, not because they are smart, not because they are wonderful or athletic, it's because they had discipline. Yeah? When I started trading, there was 45 traders that we shared a building. And, you know, I had CAs, I had actuaries there, I had all these people. The person that was the best trader, he barely had high school. The CAs thought they were too clever for the market, so they went against it, and they would lose money. The guy that did the best, and I mean, this is talking about 20 years back, he was making a couple of 100K a month just as a 24-year-old kid, 23-year-old kid. So luckily, the market doesn't care where you come from. It cares about discipline. It cares about your money management, right? It doesn't care what degree you have. It doesn't care. The only thing you need to focus on is protecting your money. So the solution is use hard stop losses, take profit orders. It takes care of the fear and greed. Secondly, position sizing. Don't overexpose yourself to the market, because if you trade too big, you are not giving yourself enough chances to catch the good trade, right? If you risk 20%, you got 5 good trades. That's it. If the market doesn't give you 5 decent trades, you are gone. And trust me, just this week, I made 4 losing trades in a row. It happens. But I wasn't risking a ton of money on it, so I got to trade the next day, and the next day, and the next day. And the good trades came, I took them, I made the money back and a little bit more. But trading hasn't been that easy lately with all the volatility. And I'm fine with it. Risk a fixed percentage per trade. Like I said, one trade should not matter. One trade should never become more important than the other one. You put all your eggs in one basket, you are going to get emotional, right? So keep them consistent. Keep everyone the same. That way you stay objective, unbiased, neutral. Yeah? That way you don't have to look at your phone every 5 seconds. Or wake up at 1 o'clock in the morning and see what the Hang Seng is doing. Max daily loss limit. So like I said, mine is 2.5%. If I lose 2.5% of my account, I'm done for the day. And you know what is actually good? Because I get to step back, I get to clear my head, and tomorrow I will come back rejuvenated. I will not be revenge trading. I will not be forcing the market. I will come back fresh, objectively, and I will do it again. Hopefully not lose the 2.5 again, yes? And then when the markets get super volatile, adjust your risk. You need to adapt to what the market is doing. So, you know, where I used to risk 2.5% in a day, with the market as it is right now, if I see the market is super choppy, super volatile, I risk 1%, or I risk 1.5%. I reduce it because of the environment that we are in. Yes? And then I know we don't have a lot of time, but out of my personal experience, you know, if the market doesn't fit my style of trading, I leave it alone. Okay? I will never force the market to give me a trade. I will wait patiently for the right setups. I will take the trades with the most clarity, the ones that I feel the most comfortable with. Just because you trade less doesn't mean you will make less. Okay? It's better to take quality trades than try to do 100 trades that are not very good. Then I don't keep all my trading money in my account. I keep my week's risk in my account. That way, if the crazy takes over, I blow the account, it's fine. I will come back next week and I will make money. I don't take myself out of the game. And like I said, the market will always be there tomorrow, guys. Don't force it. It will be there Monday. And if it's not there Monday, then we are not here. Yes? Something bad happened. And then, guys, I know you love trading. It is exciting. But money management is not there to make trading exciting. It's there to keep you in the long game so that you can figure out how to make money. Okay? So do yourself a favor, put more focus on risk management, especially in this environment, and you'll see the difference in your next week or month's trading profits. Okay. Thank you very much. I enjoyed it. You guys are awesome. Have a good day. Ciao, ciao.